In the United States, we're making a lot of progress towards crypto regulation and crypto clarity. And on today's video, we're going to be diving into some of the headlines that is talking about the progress being made in the United States. And we'll also lock in very deeply on real world assets. Make sure you hit that like button, make sure you subscribe, and let's dive in. Top headline for today, lawmakers just released a much awaited crypto market structure bill. Here's what it means for digital assets and what comes next. Now we're going to talk about the main bullet points of this here. The Senate Agriculture Committee released Monday a draft of its part of a digital assets market structure bill that could guide the future of the crypto industry in the US. So the government is opening back up. People are already getting back to work. And the ones who got paid big by cryptocurrency are head down writing bills to make sure that this whole industry moves forward. And as Trump says, to make crypto the leader in the whole world. And here's the second bullet point. Their draft includes a provision that will give favorable regulatory status to tokens such as Bitcoin and Ethereum. So remember, they're pushing Bitcoin for our treasury assets, and now Ethereum is also being pushed for treasury assets. So they were going to focus on the big dogs, obviously, first. And the third bullet point, the text also calls for the CFTC to have more control over regulating the crypto industry. That's the Commission for Futures and Trading Commodities. And then the final point here, clear guidelines on regulating decentralized finance are largely absent from lawmakers' draft. So after they figure out what's the security, what's not security, right? Bitcoin, Ethereum, XRP. Then they already have figured out the stablecoin part of this whole deal. And then the next two phases will be the real world assets. And then finally, decentralized finance. All right. And the next big story here is the SEC chair, Paul Atkins, outlines plans for crypto token classification. Remember, if you've been in crypto for a while, we've been dealing with Gary Gensler. Gary Gensler, Elizabeth Warren, they were not friendly with crypto, caused a big problem for what's security, what's not a security, and they did not make it clear. He's out of here. We have Paul Atkins. Paul Atkins is working towards the overall goal. All right, now let's get to some non-US government headlines and talk about some of the big dogs out here. SWI deploys USD SWI stablecoin for on-chain commerce. So US dollar tokenization, that Clarity Act that passed recently, this is why everyone's focused on dropping a stablecoin that is backed by treasury assets, that is backed by US dollars. So if you're big on SWI, let me know what you think about the USD SWI. And Polymarket to become exclusive partner for Yahoo Finance. This is a big deal. Polymarket is obviously the largest predictions market, right? I'll call it gambling or betting market, crypto. So Polymarket partnering with Yahoo Finance, big corporation partnering with Polymarket. It's good news. And I'm wondering if we're going to get a Poly token dropping anytime soon. Y'all let me know if y'all got any alpha on that. And then finally, let's talk about the big dog, the big exchange in the United States. That's Coinbase. Coinbase seeks legal sanctuary in Texas amid Delaware drift. So usually big corporations incorporate their company in Delaware for tax reasons and to, have more legal protections. Now Coinbase is talking about getting out of Delaware and heading to Texas. Texas has been attracting a lot of companies away from California, away from Delaware, away from New York and whatnot. They're moving down south, where the government down there has been deregulating, rather, we'll say, making it easier for companies to pay less taxes and to make sure that they are making money. So let's close some of this out here. and then dive a little bit deeper into Coinbase before we head to our main coin of today. Finally, so we're supercharging token sales. Coinbase One members can now request up to 5x more tokens. Get ready for Monads sale next week and future token sales. Fund your wallet with USDC and earn a bonus 3% back in Bitcoin. So rumor is that Coinbase is facilitating a new launch called Base. This is the Base token. They mentioned it, not a clear roadmap yet, but if they're talking about it, they're doing drops like Monad. They have the integration with Aerodrome. This is all signs leading to the Base token drop, which is ticker symbol BASE. And if that drops, you know it's going to be fully integrated into the Coinbase ecosystem. So we got to keep our eyes peeled. So that's the main headlines I got for y'all this week. We're talking about government clarity. We're talking about big partnerships like Polymarket and Yahoo Finance. And then obviously Coinbase getting ready for the Base token. Now let's dive into our main story today. One of the things we're going to be talking about, focused in deep, obviously, is real world assets. So this post right here is from Ondo Finance, and they had a conversation with the founder and CEO of Robinhood, that retail investing app that we all love. So let's play this clip.
If you think about, what's a part of your portfolio, if you're a high net worth individual, there's a lot of these assets that actually retail can't access currently. And I think that tokenization is a way to enable that at scale and sort of like reduce some of the downsides that would typically be associated with holding those assets, like lack of liquidity, being locked into positions, not being able to like chunk the assets out and invest in portions of them. So that's why we're continuing to push on it, both in the US and outside. And you should expect this to become bigger and bigger in the coming years. Of course, starting with stocks, which is the asset class that we think has the most potential and we're also closest to.
Okay, you heard it. So what he's talking about is tokenization. The future of finance is tokenized. He says this will be bigger and bigger in the coming years, starting with stocks, the asset class with the most potential. So they're obviously, Ondo's been talking about, I've been talking to y'all about it, treasuries, gold, real estate, bonds, the whole nine. That's what they're tokenizing. And stocks and ETFs are obviously the most attractive. So Robinhood is pushing. He is making the app a one and all app for finance, for banking, for trading, for investing, for private equity. So that's what happened. Y'all let me know what y'all think about the Robinhood app and what Vlad has just said. All right, some more Ondo Finance news. Regulatory clarity will unleash the full potential of tokenization. Quote, "We will not let fear of the future trap us in the past. Much respect." At the Federal Reserve Bank of Philadelphia, SEC Chairman Paul Atkins, I just talked about him, outlined the next phase of Project Crypto, laying the foundation for clear, modern rules around digital assets and tokenized markets. At Ondo, we're encouraged to see progress towards a clear framework that lets innovators and institutions build with confidence. So here's a quote from Paul S. Atkins, the SEC chair. "In a free society, the rules that govern economic life should be knowable, reasoned, and appropriately constrained. When we stretch the securities laws beyond their proper scope, when we treat every innovation as presumptuously suspect, we stray from that core principle. When we recognize the limits of our authority, when we acknowledge that investment contracts can end and networks can stand on their own merits, we honor it." Basically, he said, we in a free market, we in capitalism, let innovation innovate and let us get out the way and make sure that everything is knowable, everything is reasonable, everything is clear, so we can keep this free society going. So much respect. Tokenization is entering the mainstream. That's what we're talking about today. Today, Ondo's Nathan, he's the CEO, joins leaders from BlackRock, which is their backers, Morgan Stanley, and Coinbase at the Federal Reserve Bank of Philadelphia to explore tokenization's roles in finance, a timely discussion on the transformation of capital markets. So that quote too right there was, all about what they're happening. You got to get the Federal Reserve on board. We got to get the government on board. And, the chain links, the Ondos, the Coinbases, they're really focused on getting this to happen. And so more conferences, more panels. This panel here, tokenizing the world, exploring the potential of putting assets on the blockchain. And I thought this one was interesting. So SmartCon was the Chainlink event that happened recently. To the trillions of tokenized markets, to the scale to trillions, tokenized markets must exceed traditional standards. Quote, delivering liquidity that's as good as traditional markets is a top priority. So let's hear what Nathan has to say.
So when you look ahead, how do you see tokenization evolving over the next few years? Are there milestones that would benchmark that success to?
We look at, number of users, number of distribution channels, like total value on chain. I mean, I think making sure that, I think it's table stakes that tokenized stocks are at least as good as their regular stocks. So like price impact, access to leverage, like really until we launched global markets 6 weeks ago, if you wanted to buy a tokenized stock, the price impact, as an example, to buy $100,000 worth of Tesla on, the previously leading platform, you'd have like 2% price impact versus it's like 2 bips in regular markets. So like making sure that, we continue to deliver liquidity that is as good as traditional markets, and that's something we track really, really closely. That's going to continue to be really important.
So Nathan breaks it all down. What you really need is liquidity. You don't want a 2% through 5% of slippage where you're spending $100,000 and you're only getting $95,000 worth of product. That is a no-go for almost everybody. When you're trading as well, you want your bid and your ask spread to be a lot closer, so that way you don't lose money on the trade in general. Then you got to get more upside or downside if you're taking a put to get your money back. So they are working on that. Everything's in discussion. Liquidity does drive the markets. Now, to finally close out this discussion about Ondo Finance and what they're working on, this one's interesting to me. It says, we're excited to announce that Ondo Finance has appointed Ondo Bode, former head of digital assets at McKinsey, as president. McKinsey, if you know anything about McKinsey, McKinsey's hands as a company is in everything. They move and shake behind the scenes. They have a lot of influence. And their former head of digital assets is now the president at Ondo Finance, which means he can make phone calls. He got a lot of connections and he knows what's going on for business development. Under Ian's leadership, Ondo will usher in the institutional era of tokenization, accelerating our reach and impact across global markets. He says we're ushering in the institutional era of blockchain, and I definitely see that happening. Now, let's move on to our next blockchain of focus, Stellar Lumens. This one here is very interesting. So let me play y'all a clip.
Stellar is going to be, by the end of the year, like the best place to experiment on in terms of like cutting edge cryptography. And we see privacy being a major hurdle in that adoption. We're tackling this. We think we have like great ideas and we're working with like great partners in the ecosystem to make it happen. But anyone who tells you they have privacy completely figured out are like full shit.
They're focused on privacy. This is the chief product officer. Privacy is a major hurdle. We're committing to conquering it, right? Private transactions. Just think about the possibilities, especially for corporations, right? You got the JP Morgan type, companies. They don't want all of their transactions to be in the public. They want stuff to be private because that's how they operate. But if you can use a public blockchain like Stellar Lumens to do a private transaction, is there a need for a private blockchain? So that's always the question, and soon enough it will be answered. So Stellar Lumens is saying, hey, let's put ourselves in position to be experimented on. And if these experiments go well, Stellar should get the benefit. Now let's dive into this story right here from CoinDesk. Stellar blockchain to power Turbo Energy's tokenized clean energy financing initiative. The solar energy storage firm has tapped Stellar and Taurus to tokenize debt to finance hybrid solar projects, starting with a pilot in Spain. Spain got a lot of sun, beautiful country. Tokenizing debt is definitely something we're gonna hear a lot more about in the future, so make sure y'all pay attention to what that means. Here we go. Turbo Energy taps the Stellar network and Taurus to tokenize debt for a hybrid solar project, starting with the pilot in Spain. And you know, a lot of debt is like corporate bonds, right? Selling pieces of your company, and then people are, you know, selling that back and forth, and they're essentially raising funds rather than selling shares for the most part. The initiative explores blockchain-based financing to broaden access to renewable energy investment. The solar storage turbo is turning to blockchain clean energy using the Stellar network, the firm said. The NASDAQ listed firm announced a new initiative, so they're just repeating that. So let's get to the meat of this real quick. The effort begins with a pilot project at a supermarket in Spain, the firm says. The move reflects growing interest in applying blockchain rails to real-world assets. Proponents say tokenized financing could lower friction in energy investments by removing intermediaries and offering automated, transparent oversight. Okay. At the core of Turbo Energy's project, we're reading right here, is the tokenization of debt used to finance power purchase agreements for on-site solar plus battery systems. The debt will be issued and managed using Taurus's tokenization platform and recorded on the Stellar blockchain. The tokens will represent fractional shares of project financing, allowing multiple parties to invest in clean energy infrastructure at lower costs. So a power purchase agreement, when you're dealing with solar, you can have a financing agreement, a purchase agreement. Either way, it's like making kind of payments, a payment plan for this renewable energy technology, which ultimately that power that it generates could be sold to homeowners, sold to corporations, and sold to businesses. So if someone wants to get in on this deal, you can be like, hey, I got 20 grand. I want to purchase some of this debt and then get paid back in the future with interest. And then y'all handle everything that has to do with the solar. Y'all make sure everything is facilitated. And then Stellar hops in and say, hey, we can do this smoother, faster, and cheaper and more transparent on the blockchain. So very interesting. And then it says the model mirrors a trend known as energy as a service, where companies provide solar and storage systems under service contracts instead of upfront purchases. The market is valued at 74.4 billion in 2024 and is projected to nearly double by 2030. So just like other solar deals, right? They set it all up, they fund it, and when maintenance needs to happen, that's all part of the contract. You as the debt buyer just buys in, collect the money, basically. So that one's interesting. And here we go. 38 billion moved across chain last month. 800 million moved for under $1 in fees. This is a interview with Layer Zero, and they're talking about a whole bunch of topics. We're going to kind of break it all down. How Layer Zero is solving blockchain interoperability and what our integration means for seamless asset movement on Stellar. So Stellar pushing. So they talk about the birth of Layer Zero, if you know anything about that. Early crypto days, understanding Layer Zero's technology, problem with wrap assets. There has been a lot of problems, duplicate assets and whatnot. The future of omni chains. Unified supply model, fundamental shift. Then they talk about the business model, permissionless and immutable blockchain. And then zero slippage transfers, revolutionizing value movement, the patience and vision behind blockchain interoperability. And essentially, so the CEO of the Stellar Foundation has been doing a lot more of these type of talks and discussing in depth about these partnerships. And throughout crypto, you know, you got Chainlinks, you got Wormholes, you got Axlar, Layer Zero now. These are blockchains that are helping it facilitate native token transfers, because if you're using, let's say, USDC on Stellar and you want to flip it over to Ethereum, you need that to happen without getting your token lost somewhere in some bridge. That has happened to me. That has happened to many of y'all if y'all been out here. So that's what they're essentially talking about in this interview. All right. That's what I got for y'all for Stellar Lumens. Now let's get to Mantle. Mantle has been interesting. Last time we talked about Mantle, I focused a lot on its treasury that they have. So we're going to dive in with that again towards the end of this segment on Mantle. But here we go. Mantle's real world asset push over 150,000 in builder prizes in their global hackathon. So they launched a hackathon that is focused on RWA, and we know that as real world assets. So here we go. The bridge between TradFi and DeFi just got stronger. Through Anchorage Digital's custody support, Mantle now leads a seamless trifecta with Bybit Official, ByReal, and where centralized exchanges, decentralized exchanges, and our high performance network flow as one. So they got big partnerships happening with Anchorage Digital. Big money, basically, big money. Now let's get back to the hackathon. The momentum, which is Mantle, is truly global. The first wave of Mantle Global Hackathon has already drawn 400 plus aspiring builders and founders from 15 plus countries. There's no better moment than now to innovate, build, and turn your ideas into impact. So basically, I got a lot of countries that's involved in this hackathon, this real world asset hackathon. If you notice, the United States is only about 5.79%. A lot of countries involved, and what they're doing is they're going wide, because blockchain technology is more than just the United States. Even though that is planning to be the crypto capital of the world, they said we going wide. And then back to the Anchorage Digital partnership. Mantle partners with Anchorage Digital to deliver secure institutional custody for Mantle on Ethereum. So this is out of Dubai. They're big in doing deals with crypto companies right now. So Mantle serves as the governance and utility token powering the Mantle network, enabling holders to participate in protocol governance, access decentralized applications, and engage in Mantle's expanding DeFi ecosystem. With Anchorage Digital's custody solution, Mantle holders can now hold Mantle on Ethereum as a treasury asset while leveraging Anchorage Digital's comprehensive suite of services. Basically, Mantle says, we got a treasury asset for y'all. Look no further. And here's this treasury that Mantle has been personally building. The largest community-owned treasury, 4.7 billion. Mantle is driving the future of on-chain finance with one of the largest community-owned treasuries. Just about 80% of the treasury is in Mantle. So them holding this asset lowers the sell pressure and increases the upside potential. They also have Ethereum, Bitcoin, stable coins, some staked Ethereum, staked ETH, staked Solana, and Cook token, because they said they're cooking. Again, as I talked to y'all about this before, right? I like the cryptos that are creating strategic funds. We like cryptos that are keeping their assets close and sharing and distributing payments to the holders. Treasury asset distributed to Mantle holders on Mantle Rewards Station. And then here's the campaigns that they have with the different totals of distributions, right? The initial rewards were provided as M shards and have been converted to ENA tokens. The conversion rate breakdown. So it looks like each one of these users rewarded a lot of users rewarded, but different type of tokens. And my understanding here is that if you're holding Mantle, you get to participate in these type of campaigns here. The main thing here though, we like assets on this channel that hold assets. That's the main thing I wanted to talk about. Anyways, we got one more thing for y'all before we go. This is a poll that will be out. It says, which crypto narrative will be the next catalyst to push crypto higher? So we have a symbol of Chainlink that's about institutional adoption. We have a Bitcoin symbol representing crypto treasuries. We have XRP representing payment infrastructure, and we have Ethereum representing real world assets. Y'all let me know which narrative is going to push us to the next level, and leave me a comment about that below. Today, we dived in deep, hit you with some big headlines, crypto regulation. We focused on real world assets between Ondo, Stellar Lumens, and Mantle's hackathon. Make sure y'all hit that like button. Make sure y'all subscribe and let me know what you think in the comments below.
Passive income, gold in my dental. Thank God for my mental. Investor fundamentals, told my girl it was simple.